One of the most pointed moments where I really saw a contradiction here was that he said something like the Fed's job is to set interest rates. So I said, wait a second, hold on. So you believe in price controls? And he said, no, of course I don't believe in price controls. But I said, isn't the interest rate a price? And you want the Fed to control it. So that's price control. He's like, no, that's not what I'm saying. Well, don't price controls control the price, like control the prices of goods in the economy? He's like, yeah, well, so everything in the economy is affected by interest rates. Yeah. So you believe in price controls of everything? No. So like you couldn't. It's not like he objected to that and proved that I was wrong. It's like it was like putting like a contradiction algorithm into a computer and it just like kind of glosses over it and like keeps going. Even many gold bugs and silver stackers do not really understand the point that gold is money. We're not making a historical point that in the past it was money and now we have the dollar. I'm saying right now, all the time, when you use a dollar, you're using the gold value of a dollar. The gold is the money itself. But if you look at the S&P versus gold since 1971, gold is outperforming. So you could have just done nothing and just held money and you would have made more money. The monetary system is still based on gold because once the gold exchange rate with the dollar or any other currency goes to infinity, that is the definition of hyperinflation. And some people are just really incapable of understanding that because it means they've been going in the wrong direction. You have to turn around, go back, and it's going to lead them to disaster. And that's what I'm saying. My point is that many gold and silver bugs do not understand that gold and silver are money, okay?
According to Rafi Farber, the word on the street is that the monetary system is still deeply rooted in gold. Why? Well, because if the value of gold skyrockets compared to the dollar or any other currency, that's the textbook definition of hyperinflation. Apparently, some folks just can't wrap their heads around this simple fact, and it seems like they've been heading down the wrong path for a while now. Rafi insists they need to make a U-turn pronto before it's too late, and they find themselves in a world of trouble. The crux of Rafi's argument seems to be that many gold and silver enthusiasts fail to grasp the fundamental concept that gold and silver are essentially money. He stresses that gold, in particular, is what defines a dollar. It's like the OG currency, you know. But here's the kicker, right now, gold is being undervalued. Yep, you heard that right. So, according to Rafi, savvy investors should be snapping up gold while it's on sale, banking on the inevitable collapse of its substitutes and the subsequent restoration of its true purchasing power. And as for silver, well, Rafi sees it as the main backup plan for gold in a gold-based monetary system. Think of it as gold's trusty sidekick, always ready to step in when needed. But hey, let's not forget that we're currently riding the gold train, not the silver one. Rafi's takeaway: gold and silver are the bedrock of all monetary systems. No ifs, ands, or buts about it. It's not a matter of choice, it's just the way things are. There's really only one path forward. We've got to hitch our wagon to gold. Why? Well, because historically, that's where all the price tags originated. It's like this unbroken chain that we've got to keep going unless we want to hit the reset button and start civilization from scratch, which Rafi likens to some kind of doomsday scenario straight out of Armageddon. But let's be real here, that's not likely to go down. Sure, we might be in for a wild ride, possibly the wildest economic roller coaster humanity's ever seen. But it's not gonna wipe us off the map. Now, what happens after this colossal shake-up? Rafi's take is pretty straightforward. Don't hold your breath for some grand centralized authority to swoop in and save the day with a perfectly planned new monetary system. Nope, that's not how it's gonna play out. Instead, picture something more akin to the breakup of the Roman Empire. Pockets of people trading goods and services for gold and silver because, hey, they're the real deal when it comes to honest money. Eventually, after the dust settles and everyone's had a chance to regroup, those pockets will start connecting again, piece by piece. But make no mistake, it's gonna be a slow and steady process. That's the word on the street, folks. Rafi Farber has some thoughts on what the future monetary system should look like. His proposal: how about we keep it simple, honesty? Yeah, that's right. Rafi suggests we stick to the basics. Gold and silver are money, plain and simple. No messing around with inflation or artificial manipulation. Just let them be what they are, and that'll be our ticket to a fresh start. Just like it's always been after the collapse of empires throughout history. Rafi's pretty convinced that despite all our fancy technological advancements, human nature remains the same, and we're bound to circle back to this tried and true approach. As for the nitty-gritty details of how this transition will unfold, well, Rafi's not exactly playing fortune teller. He can't predict who's gonna strike it rich or what the political landscape will look like down the road. But one thing he's sure of, things are gonna get a whole lot less centralized and a whole lot more localized. Yeah, think smaller communities taking the reins. Now, if you're looking for something more concrete, Rafi does have one prediction up his sleeve: the eventual demise of the dollar right here in the good old USA. He's been banging this drum for a while now. See, according to him, the dollar's fate is intertwined with the assets on the Federal Reserve's balance sheet, which mostly consist of treasuries or mortgage-backed securities. So yeah, buckle up, folks. Change is on the horizon, and Rafi Farber seems to think it's gonna be quite the ride. When it comes to treasuries, he doesn't see them flat out defaulting anytime soon. Why? Because the powers that be always find a way to raise the debt ceiling to keep the payments flowing. But mortgage-backed securities, well, that's a different story. See, if folks start skipping out on their mortgage payments, those securities could very well go belly up. And when that domino falls, it sets off a chain reaction leading to a massive deflationary spiral. Here's how it plays out. When one side of the dollar vanishes from the Federal Reserve's balance sheet due to defaults, it's like those dollars cease to exist on the other side as well. It's all about balance, you know. So, cue the deflationary wave. And what's the Fed gonna do? They'll fire up the printing presses to pump out new dollars to fill the void left by the ones that bit the dust. But here's the kicker, you won't see the effects of this monetary dance directly at your local supermarket. It's more like a game of telephone, where each link in the chain passes along the message without really knowing what's happening upstream. So, while the Fed's busy churning out new cash, your neighborhood grocery store might casually bump up the price of bread without ever peeking at the Fed's balance sheet. It's all part of this intricate web where every piece is connected, even if they're not consciously aware of each other. Wild stuff, right? That's the word on the street, folks. So, here's Rafi Farber's take on how things could go down. Picture this, defaults on mortgages start cropping up, housing prices take a nosedive, and suddenly, a major bank finds itself in hot water thanks to a boatload of bad mortgages on its books. Cue the government bailout, with the Fed's balance sheet ballooning by a cool $5 trillion in the blink of an eye. And just like that, the dollar starts looking mighty shaky out there in the streets. But hey, that's just one scenario out of 1,000, according to Rafi. Now, here's where it gets interesting. Rafi's got his eye on the COMEX, where things could get real hairy if there's a sudden rush for physical metal. It's happened before, back in 2015 to 2016 when silver prices were in the dumps. People were scooping up physical silver left and right. But then the supply magically rebounded. Some folks reckon it went straight back into the COMEX vaults, but who knows for sure. Rafi's even tried to get the scoop from the folks nabbing up the silver, but it's still a bit of a mystery. But here's the kicker, if there's indeed a run on physical silver because folks are spooked about a looming monetary meltdown, well, that spells trouble. Especially since, as Rafi points out, when supply shrinks, prices tend to shoot up. Basic Economics 101, right. So yeah, keep your eyes peeled, folks. Rafi's got his finger on the pulse, and things might just get wild out there.